Hi, good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at earnings results, particularly in the banking sector, and two of our homegrown boys. We're talking about RFHL, or Republic Financial Holdings Limited, as well as First Citizens Group Financial Holdings, or FCGFH. Now, both banking groups would have reported very good or improved performance for their 9-month periods ended June 2023. Let's take a look at what those results were and what investors might expect in the coming months ahead. Turning firstly to RFHL, well, the group would have reported an earnings per share figure of $7.73 per share, which was a 10.3% improvement from the $7.01 reported in that prior 9-month comparable period of 2022. Driving that performance was a 12.6% increase in net, in net interest income from 3.05 to just about 3.4 billion TT dollars. Overall operating profits improved 18.6% from 1.9 billion to just about 2.25 billion, with net profit attributable to equity holders increasing at 10.2% from 1.145 to just about 1.262 billion dollars. So certainly making very good reading for shareholders of RFHL and prospective shareholders as well. When we take a look at that operating income by segment, well, in the main, that net interest income, again, up 12.6% in that orange color, from 3.05 to 3.4 billion dollars, as well as other income moving from 1.477 billion to just about 1.57 billion dollars, a 6.2% increase roughly. Overall, that in operating income, again, increasing to just over the $5 billion mark for that 9-month period of 2023. When we take a look at profit before tax by geographical segment for RFHL, we see some notable changes over the comparable periods. One of the most notable changes would have been that decline in PBT for its traditionally largest segment or geographical segment, Trinidad and Tobago, in that reddish color, falling from 869.8 odd million to just about 596 million, a roughly 30% decline. However, this was more than offset by PBT gains in other jurisdictions. Barbados, for example, in that blue segment, increasing from 144.6 to just about 361 million. Guyana also improving from 157 to just about 217.7 million. And the Cayman Islands, in that bright green color, increasing from 168.2 million to 352 million. So again, that geographical diversification certainly aiding the fortunes of Republic and by extension its shareholders in terms of continued profitability and economic resilience, despite any shortfalls in any one particular region. Now, from a valuation perspective, we can see that those trailing earnings per share continues to grow for Republic Financial Holdings. On a trailing 12-month basis, their earnings are currently just over $10 per share, with a price earnings ratio of 12.6 times. And we can see that continues to moderate, meaning that investors are getting better value per dollar invested in terms of earnings that are generated by their investment in RFHL. So certainly good reading for Republic Financial Holdings shareholders, and particularly prospective shareholders. So at that price of just under $127, again, RFHL trading at a price earnings ratio of 12.6 times, just below the sector average of 13 times, and offers investors a dividend yield of 3.6% above the sector average of 3.2%. So with those earnings growth, but with that earnings growth in mind, geographical diversification, of course, paying dividends, relatively fair valuations, and again, relatively attractive dividends compared to the sector average, Bourse is going to maintain a market weight rating on RFHL for the time being. Turning quickly to First Citizens Group Financial Holdings, or First Citizens, for today, the group would have reported an earnings per share figure of $2.56, a 14.6% increase from the prior comparable period of $2.06. Net interest income up 25% from 1.09 odd billion to 1.36 billion. Overall profit after taxes increasing 14.3% from 518 million to 592.7 million. Of course, when we take a look at the profit before tax by segment for First Citizens Group, we could see that their traditionally largest segment, retail and corporate banking, improved just over 9% from 698 to 763 million in that blue segment. Treasury and investment banking increased a more pronounced 55% from 334 to 519 million. And the trustee and asset management segment continues to struggle just a bit falling from 41 million to 38 million. Overall, in terms of a valuation perspective for First Citizens Group Financial or First Citizens, we can see that on a trailing 12-month basis, like Republic, that valuation story continues to moderate and become a little bit much more attractive for prospective investors, with their price earnings ratio falling from a high at the 9-month period of 2021 of 20.1 times to its current level of around 15.5 times. So again, better value in terms of prospective shareholders for buying a share of First Citizens Group or FCGFH in terms of what you pay per dollar of earnings generated by this particular stock. So at a price of just under that $50 mark, $49.77, again, FCGFH is trading at 15.5 times price earnings ratio, above the sector average of 13 times, but also offering a pretty compelling dividend yield of 3.6% compared to that sector average again of 3.2% rather. So with increased net interest income on mine, looking at that credit impairment reversal, but of course with one eye on those fairly elevated valuation metrics, particularly that price to earnings ratio compared to the banking sector average, Bourse is going to maintain a market weight rating on FCGFH for the time being. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773 or to Bourse. Email us at invest@boursefinancial.com. And of course, you can check out our website, bourseinvestment.com, where all of our research is absolutely free. And of course, you can catch us in today's business section of the Trinidad and Tobago Guardian newspaper. Stay safe, have a very happy and productive investing week, and we'll see you next time on the Bourse Report.